All right, so we're talking about the 7 tools to manage your business financials, well, and your personal financials. And today we're going to cover the balance sheet. Woohoo, the balance sheet! All right, fine. Maybe you're not as thrilled as I am to talk about the balance sheet. Maybe you don't have one and you're wondering if you even need one. And hopefully today I can convince you that you need to have a balance sheet. And it's worth your time and effort to get one together. Or maybe you have one and you've never even looked at it. So perhaps I can make this a little less intimidating for you so you can start to go through it. So what's the balance sheet? Well, the balance sheet is a tool that works directly hand in hand with the profit and loss statement, which we've already said is the mother of all tools. The profit and loss statement is a rolling movie of all the stuff that's coming in and out of your business, whereas a balance sheet is a snapshot in time. And in particular, it is the only tool that tracks how much cash you have and how much debt you have. Now, you can track a lot of other things, a lot of other assets and liabilities on this balance sheet that aren't necessarily directly related to cash in the bank account. Though the thing I use it most for is tracking to make sure that all of the cash is in the right bank accounts and that the balances in the books match the balances in the actual bank accounts. As a matter of fact, this balance sheet is one of the ways that you can see whether or not your bookkeeper is doing an accurate reconciliation. Because if the balance sheet account balance matches that cash in the bank account itself, then chances are all the other data which is flowing up to make that number is right. So let's take a look at it. The balance sheet is made up of 2 primary areas, assets and liabilities. And assets are things like cash in the bank account. So you can see here in this particular case, there are 2 checking accounts and a reserve account. And those 2 accounts account for $19,000 in cash. So however many bank accounts you have tied to this business, or by the way, in your personal balance sheet, you would have a similar function, then that is going to show up here under bank accounts as an asset because cash is an asset in your business. You may have other things too, other assets in here. And from time to time, you're going to see stuff like this, uncategorized assets. You actually don't want this. Anything that is uncategorized needs to be categorized. So this is a bit of a yellow flag for the bookkeeper. Say, okay, what is this and how do we clear that out? As a matter of fact, anything you see that's around other or uncategorized or not named, assets or liabilities, that is your indicator. Something is going on, and you need to do a little double click on there and see where the data may not be lining up. Now, in QuickBooks, you can actually click on this line item, and it'll take you to that transaction or that series of transactions. But the balance sheet gets a little tricky. I mean, it gets a little bit in the weeds around accounting practices, and so I really highly recommend you have a bookkeeper who is managing your balance sheet. Not a lot of bookkeepers like to manage the balance sheet, and they lean on the tax advisor or the CPA to do that. That's okay too, as long as someone is reconciling this balance sheet, ideally once a month, but at least once a quarter. If you're reconciling it once a year only at tax time, then you're missing the whole point of having a balance sheet for you on a practical basis. All right, so those are assets. You can have other assets too, right? You might have computers, other equipment, office equipment. You might have a vehicle in here. You might have furniture as assets. Depending on the type of business you have, all of your inventory could be in here as assets. You don't have to necessarily track all of your inventory on the balance sheet, but you might, right? And you certainly might track large assets such as a vehicle. That could certainly be something that would sit here on the balance sheet, particularly if you have a loan, because the loan for the vehicle is going to show up here under liabilities, right? So what are liabilities? Liabilities will certainly be any credit cards that you have in the business name. Love the balance sheet because it's tracking the total amount due on these credit cards. There's nothing else that's doing that. Any other loans you have, lines of credit, right? In this case, we're showing a $50,000 limit on a line of credit. Current balance is 0. If you had a balance, it would show here. PPP loans showed up on the balance sheet until such time as they are forgiven. And then they roll over to the profit and loss statement. But any loans, until they're paid off or forgiven, will show up on the balance sheet. So that's the majority of it. Assets and liabilities will show you pretty much everything you need to know for your balance sheet. Now, down here, you have this equity section. In all practicality, you're not going to spend a lot of time in the equity section, but it does have a little ability for you to track your owner pay. Remember, I was saying earlier that when you're paying yourself a salary through your business, W-2, that money shows up on the profit and loss statement. But if you're doing a distribution, just transferring cash from one account to the other, that is called an owner distribution. That shows up on the balance sheet, and it'll show up right here. Additionally, any personal expenses that are being paid on behalf of the business can show up here because those are essentially owner distributions. When you are paying personal expenses through the business, don't recommend it. Try to avoid that, but you might have that in here. An opening equity balance, you're probably not going to have to spend a lot of time with that. That is just the any equity you had in the business when you opened this QuickBooks account. Retained earnings would be any profitability that has accumulated year over year over year, and your net income line should match the net income line for this year's profit and loss statement. Retained earnings is the profit over the period of time of the business, or at least as long as this file has been open in QuickBooks, and net income would be the total amount for the year. I hardly pay any attention to retained earnings. I do pay attention to owner's pay, and I do pay attention to net income because I want to make sure that this number matches the net income on the profit and loss report. So there's, if you're not doing your own books, you need a couple hacks to make sure that you know that things are being reconciled correctly. One is this one. Does this net income line match the net income on the profit and loss statement? The other is, do the balances and the bank accounts match the balances in the assets in the balance sheet? And then the other is, do you know what all this stuff is? Or is there some random stuff here that you're not sure, like stuff like uncategorized assets? If that's the case, you need to do a little bit of cleanup. So balance sheet, recommend looking at it once a month. If you don't have one, get one. You probably have one because your CPAs probably had to prepare one. A lot of banks, when you're looking to get a commercial loan, will require you to submit your balance sheet because they want to see how much debt is the business carrying and how much cash does it have. So keeping this up to date is important to both understand debt and cash, but also for lending purposes so that, should you want to get a loan on something, your balance sheet is really clean and accurate. And then finally, I'd say just make sure that your overall books are tight. This is like the roll-up kind of report. A lot of things have to happen correctly and accurately for the balances here to show up correctly and accurately. And so this to me is always an indication of the health of my books. If this is accurate, it's very likely everything else is. All right. So next step, get yourself a balance sheet, or if you have one, open it up, see what's there, ask some questions, make sure you know everything on this balance sheet and that you keep it clean and keep it tight.